Morning. Pretty sure all the audio's working. It's always interesting, the old world of doing live Facebook or YouTube. You think you got it all worked out, and then sometimes something goes a bit wobbly. But hey, good morning. Welcome to another Wealth Coffee Chat. Jason here with you guys. Do the intros while everything's warming up. While people are jumping on, it's a fabulous Friday. A little bit on the rainy side out there here today in the Gold Coast, but hopefully wherever you are, you're having a good morning. Fabulous Friday. Everyone's all good. We've got a few of the regulars jumping on. Hey Pratesh, good morning, mate. There's Jeff. There's Chris. Good morning, Graham. How are you, mate? Good to see you. Welcome back to the regulars. Oh, there's Karen. Cold and wet down your way, hey? Oh, there you go. Well, it's good for the grass, they say, or the ducks, or whatever. Morning, Alison. Yeah. Morning, Michelle. Just getting out and about. There's Stewie's up as well. James. Good to see all of you guys here. Anyone who's new, if you're new, give us a shout out in the chat. Taran, how are you, mate? Good to see you. Arnie, if you're dialing in, if you're new to the mentoring group and this is your first time on one of the morning coffee chats, myself and Sam run every morning. Sam, my business partner, 20 years at Positive. We've been coaching property investors around Australia and New Zealand over 20 years. He does a little segment each morning called Ask Sam. I do a little segment each morning called Wealth Coffee Chats, and each 2 weeks we get together with all of our mentoring clients and do an update, market, information, training, aspiration, inspiration, property deals every 2 weeks at our mentoring nights, which is super cool. 1 degree, holy dooly, Pratesh. That's cold. That's giving me a bit of a shiver down the spine. Morning, Debbie, and morning, Christina. So yeah, quick shout out tonight, gang. A cool opportunity. Andy Fenton is actually going to be live in my studio tonight. You guys have seen my studio before, right? There's some things there. There's over there. Got the cameras, the lights, the action. This is you guys looking at yourself right here. Got all the stuff. Anyway, there you go. So Andy and I will be doing Wealth Coffee Chat this evening live in the studio, and that'll be cool. It's the first time we've done it physically together with all lockdowns, and Andy lives in Melbourne and I live in the Gold Coast. Friday afternoons we tend to be at our respective homes rather than traveling out and about. But this week, Andy is going to be here. We're going to do a live breakdown, gang, we're going to dive a bit deeper into some of the financial planning methodology when it comes to insurances and covering yourself in that space. It's actually, it's a super important topic. Like Andy and I sort of alluded to the other day, borrowing, debt, et cetera, et cetera. What do we need to cover and how do we need to do it? We're going to dive deep into that tonight, Wealth, Wine and Wisdom at 5 p.m. live in my studio. So if you've got time, make sure you jump on live for that one. But this morning, I wanted to talk about the regulators, or the talk about the regulators getting involved in the property market, the finance market, et cetera, et cetera. And, there's a little bit of concern or worry. The property market right now is getting pretty fired up. It has been for a good 12 months. It's been going along quite nicely. And in places like Melbourne and Sydney, setting record highs, new record highs for property prices, average property values. Rents aren't catapulting along yet, but they will. And, for many of us, we're like, yep, beautiful. Let's make hay while the sun shines. But there is a bit of talk, a bit of rhetoric around right now. ANZ's, chief economist said, we think that we think the bank, not the bank, the reg needs to get involved, blah, 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 blah. Now, I think that's a bit of grandstanding. I think it's a bunch of bullshit. But let's talk about it, and let's talk about what happened. Let's do a little history lesson, what happened last time. Regulators got involved in 2016 and 17, and they did a bit of a review on the lending practices, supposedly, of the banks. Now, the banks were being naughty, and they got in a bit of trouble, and rightly so. They were doing the wrong thing by a lot of people, and they got fined, and et cetera, et cetera. What happened, though, what often happens, is everywhere, all brokers, all lenders, property investors got tarred with the same brush, and APRA caused the biggest investor lending slowdown we had seen in 20 years, okay? And it actually, that finance slowdown, actually, the property market in general, not every property, but if you guys didn't notice, 2017 and 18, the property market lost around about 10% of its average value if you're measuring those rolling averages, okay? So we had a downturn, we had a negative set, and it was almost impossible. I don't know if you guys remember, the bloody, trying to get a loan. For me and Sam and the team and the coaches and property investors, it was the hardest time I've ever had in my 22 years of borrowing, being a property buyer and trying to borrow money, than I've ever had in borrowing cash from the lenders. And it was an absolute disaster. We sunk. Lending to property investors went to the lowest yearly lending volumes in 20 years, okay? So we went from, something reasonable, it was average, it was pottering along, it wasn't breaking any records or anything, down to the lowest we have ever had, okay? And the knock-on effect of that, gang, because at the same time, there were some things like, overseas purchases, foreign buyers being chased out of town. There was some legislation changed, and rightly so. There was some average buying practices going on where the foreign investment buying process was overinflating some of the localized pricing. It wasn't everywhere, it was here or there, but it was starting to affect Australia's property market. And so there was some legislation put in place. And so what happened was the investigation, the APRA thing, which was to, give the banks a smack on the behind because they were misbehaving and they were doing terrible things and getting away with it. They didn't give a shit. They were like, oh, we'll break the law and we'll just get a fine. And we don't care about the fine because the fine was way less than the profit we made. It just stinks, that stuff. And remember, just remember, gang, this stuff gives me the shits, right? Okay, 3, 4, 5 years ago, the banks were breaking the law and ripping people off. Just remember that, right? Because now everyone thinks the banks are their friends, and go, oh, I'm going to do the cheapest, best interest rate at whatever bank. You know what? We have short memories. We've got short memories. Just remember, your job is to put your money where the morals are in this world. Anyway, that's a little rant. That was a side rant. That wasn't the point of today. Anyway, I'll probably get in trouble for saying stuff about the bank. But anyway, it's true. They got in trouble. They were doing the wrong thing. But listen, gang, what happened? They slowed down investor lending, and whether, and this is the thing, APRA doesn't know their bum from their ear roll, to be honest, when it comes to the property market. They were focusing on one little thing, and the knock-on effect of that, ladies and gents, has us today in the worst construction undersupply Australia has ever seen. Okay? It's just the worst. We are at the lowest. supply chain we've ever seen. And we were already heading there before COVID came along, right? We were already going there before COVID came along. COVID just made it go down faster and smashed a few nails in that coffin, all right? And now what's happening worldwide is we're having supply chain shortages worldwide, and property prices and some supply going in competition, and the prices going up for timber and materials and things like that. So we're right in the middle of it, gang. We're right in the middle of it. There is no sign or sight right now of any of these pressures being taken off the supply chain. There's not a lot of construction going on. There's not a lot of new land or new buildings coming out. Even if they are coming, they are being priced 20, 30, 40% more expensive than the ones 2 years ago because of the cost risk, the supply chain, the materials, all of that stuff. So these prices that we're seeing now, team, are going to start to come under pressure, whether we can afford it or not as borrowers. And the talk of the regulator getting involved right now, I think is just a bit of hot air and sunshine. So at the moment, there's no reason that the government would want that the regulator to step in and slow the economy down. All right, our unemployment rate is still higher than they want it. Our wages have not risen in Australia, well enough for over 8 years. Okay, so the government needs these industries to be operating. Okay, and construction and housing is in the top 10 industries in Australia for employment and trickle down economic stimulation. That's why the government threw so much money at building boosts and all of this sort of stuff. And I've got a few charts, actually. I might dust them off. Actually, I showed them last week in Wine and Wisdom, if you guys remember, and I might dust them off this week as well. There's a massive spike in owner-occupier, first home buyers, going like this, and then a massive spike in first home buyers and owner-occupiers just recently as well. And the interesting thing, gang, this is, I saw this headline, which just gives me the shits, but hopefully you're not listening to this rubbish that they're putting out. Investor lending at all-time record highs from 2 years ago. Yeah, no shit, Dick Tracy, right? Because APRA just poleaxed the lending process for investors 2 years ago, and we were at record lows. All right, if you add in the record low to the record high in the last 2 years, then we'll average out. There's nothing wrong with what's going on. There's a catch-up phase happening. But you know what? That doesn't sell newspapers or get people to click on articles in Facebook, does it? Yeah. You can't sell common sense. I tell you. But gang, listen. The point of my chat is don't get distracted from that rubbish. You focus on your strategy. You focus on where you're going. You get the stuff done, all right? If you're at property 2 or 3, just keep your head down, you bum up and get on with it, right? Just make sure you keep looking around, because what I'm seeing right now is I'm seeing lots of different ways, flexible ways to enter the market with different finance, different joint ventures, different all sorts of stuff, right? So it's actually an interesting time in the world of real estate in Australia right now when it comes to being a bit more creative than normal. So there you go, gang. Anyway, hopefully that made sense. This morning, there's a bit of talk about regulators stepping in. I don't see it. I think it's hot air and sunshine. Interest rates are still low. the market has to continue to move. It has to be stimulated. We need to build more properties in stock because that is part of our problem. If they step in and then start stopping investors getting into the market, what happens? Investors are the only ones who stimulate the new construction market, gang. Right? Owner-occupiers, by and large, unless there's free money going around, like when the government gives away a construction boost, do they give the construction boost away to buy an old property? Is that what they do? Let me hear you. No, they don't, do they? They don't give it away to old properties, second-hand. They give it to new properties because they know if they stimulate construction, it filters down into our economy. And I don't see that being a smart move for any government anytime soon. That's me. And if they do, I think they're bloody brain dead. And if that happens, crikey, man, that's it. Yeah, don't get distracted, Arnie. You're dead right. So that's it, gang. Wealth Coffee chat done this morning. A little bit of a ranty Friday. Fiery Friday. Let's call it that, a fiery Friday. I hope you're all awesome and well. Join me tonight for a live in person across the table from each other. Andy and I are going to be hanging out doing Wealth, Wine and Wisdom, and we might get down deep into the good info when it comes to that financial planning space of insurances, life planning, all those things. I think it's such an important stuff that we need to understand and dial. So let's do it. Let's hang out together. If you're there, if you're up for it, keep an eye out. Yeah, the 3 W's, Wealth, Wine and Wisdom. Thanks, Kelly. That's it, gang. Done. You guys have an awesome rest of your Friday. And join me tonight if you're up for it, around about 5 o'clock with a glass of wine. We start the day with a coffee, finish the day with a glass of wine, and good friends and good conversation. Living the dream. All right, gang, take care. I'll see you soon. Bye for now.